Welcome to the After Coffee Show with your host, Antonio Newton of the Newton Group. Today's special guest, Tracey Brown, mortgage specialist with Synovus Bank.
Hi, it's Key Hill, your favorite local real estate agent with Coldwell Banker and the Newton Group. Today we're having an interview with Tracey Brown from Synovus Bank. She is a mortgage lender there, and she's going to share with us some answers to the questions you have about the mortgage process. How are you, Tracey?
I am doing quite well today. Thank you so much for asking, and thanks for having me.
No problem. We have lots of people who are always having questions about how the mortgage process works. So you're the expert. You're going to give us some answers on a few of those questions, okay?
Yes, sounds good.
Awesome. So the first question we're going to ask is, how does a mortgage work?
Well, a mortgage works primarily by getting a particular client or potential borrower pre-qualified, okay? Pre-qualified basically is defined as obtaining information to see whether or not they are ready to purchase. So I would initially ask for documentation such as pay stubs, bank statements, tax returns, W-2s, things of that nature. Of course, I would ask for them to complete an application. And in that application, it will be asking a series of questions about their past, basically. Nothing too intense, but enough for us to be able to determine whether or not they will qualify for a home. In reference to getting that pre-qualification status, completing that application is key, and it is important to provide as much information as possible, such as, of course, your name, your address, where you work, how long you've been there, because we will at some point have to pull credit. And once credit is pulled, then that's when we can determine exactly where one stands and how they are in reference to the pre-qualification status.
Okay. Now, for those documents that they're providing to you, is there a time frame that they have to have them? How far do they go back? What are the requirements as far as that?
Good question. So we usually require at least 2 months of documentation. So such as bank statements, I'll be needing the last 2 full months of bank statements. I'll be needing the last 2 years of tax returns as well as W-2s, 1099s, things of that nature, all of that, the tax information I'll be needing for the past 2 years. I'll also be needing the last 2 pay stubs or 30 days worth of income so that we can determine exactly what they are earning.
Okay. And once you collect all of that information that they provide to you, how soon will they get an answer from you to see if they're pre-qualified?
I typically like to ask for at least 24 to 48 hours. Okay. I try to get it done as quickly as possible, but I am on the scale of a first come, first serve basis. So however I get it in, that's how I see it. But it usually takes about 24 to 48 hours, and I can get an answer to them within that time frame.
Okay, that doesn't seem too long. I mean, I know if it was me and I was putting in an application, I might be a little edgy, but that's not a bad turnaround time.
Right.
Okay, and what type of loans are there?
Well, we have different types of loans that we provide. One in particular, of course, you have your conventional loan. You have your FHA loans. We also offer VA and USDA loans. Most and the most popular, I should say, would be the conventional loans. These types of loans are primarily the loans that are not funded by our federal government. But with conventional loans, there are some differences, of course, between them and FHA loans. Conventional loans usually the DTI or the debt to income ratios are usually a little bit lower as opposed to your FHA loan, okay, which is funded by our federal government. The FHA loan types they usually give a little bit more leeway with debt to income ratios. They can go up to 50% as opposed to the conventional, most times at 45%, just depending on the loan product. But those types of loans Synovus does offer. Again, conventional, FHA, USDA, and VA loans.
Okay, when you say popular, the conventional being the most popular, is that the one that is the best out of the options that you just stated or mentioned?
Well, I don't want to say necessarily the best because it really depends on the borrower It depends on their status, their credit rating, their credit report, depends on their assets. So what I do is once the application is in, I take a look at everything, and that helps me to determine which loan product, which loan is best for that particular client.
Great answer. Thank you.
Sure.
Okay. What is the difference? Excuse me. What is the difference between being pre-qualified and pre-approved?
Okay, so pre-qualified basically is the initial part of the application. Again, I'm going to be asking for bank statements and pay stubs, W-2s and tax returns, things of that nature, okay? That gives me the outward, I guess, appearance of where they stand. That tells me, okay, it appears that you have enough information that you've given me for me to be able to say that you are pre-qualified and ready to be able to move forward with the loan. Pre-approval is different. That's when we get a little bit more deeper into the loan process. That's when we start verifying your employment. That's when we get our underwriters involved and they start looking more closely at bank statements and pay stubs and whether or not there's overtime and, additional funds coming from different places. It's a little bit more intense. But that's when it goes into that next level of the underwriting status. And once all of the information is reviewed and verified, that's when we can get our pre-approval and we will be ready to close. Now, of course, I'm saying all that quickly, but that is a process.
Okay.
And it does take time to do that. Of course, during the process between getting pre-qualified to that pre-approval and the final approval stages, that's when we're ordering inspections and title work and appraisals and things of that nature. So it does give us time in between to take care of some of the logistics with the loan.
Okay, so essentially the main difference between pre-qualified and pre-approved is that pre-qualification is just the initial status.
Correct.
But pre-approved means everything has been checked and verified.
That is correct.
And that's the main difference.
That is right.
Okay. Mm-hmm. Awesome. Okay. How much should I save for a down payment?
Well, typically, most people like to just say, okay, I need 20% down. That can be a lot of money. And most times, unfortunately, we just don't have 20% saved in the bank. So what I like to suggest to my clients, it is a good rule of thumb to me to have at least 2 to 3% of the loan amount that you're going to be purchasing. Okay. So that could be anywhere between $3,000, $4,000 to $5,000. Not necessarily saying you're going to need all of that, but in some cases, loans require reserves. Reserves meaning that you have to have a certain amount of money already in the bank for a minimum of 2 months just to be able to get to that status of approved. Okay. So I think between 2 and 3% is a good rule of thumb to have already in the bank for a minimum of 2 months.
Okay, so I'm purchasing a home. I don't know what I'm going to be putting down exactly, but I just want to make sure that I have about 2 to 3% reserved already in my account for at least 2 months.
Yes. And if someone is looking for a specific amount, okay, how much specifically should I have? 1,000, 1,500, 2,000? In my personal opinion and experiences from in the past, I believe it is good to have in the bank at least 5,000. And a lot of people say, wow, that's a lot of money. But you want to be sure that you have those funds available for things that are going to come up, such as perhaps down payment or maybe even closing costs that's not covered, inspections, things of that nature. Sometimes we have, depending on the product, there are online home buying courses, and those sometimes can be a cost as well. So if we're taking all of these funds and we're subtracting from your 5,000, you may, at the end, from 5,000, you may now only have 3,000. Right. So you still want to be able to still have sufficient funds because you don't know exactly what you're going to need at the closing table. So $5,000 is a good amount to have secured in the bank. And of course, I've had clients that have had less than that. And we've made it work. It just depends on the amount of house that they are obtaining. But a good rule of thumb, 5,000.
5,000.
Yes.
What might all be included in my monthly mortgage payment?
Typically, what's included in a monthly mortgage payment is your principal, interest, taxes, and insurance. It's what we call PITI. Sometimes there are options where some borrowers may not want to include taxes and insurance along in their principal and interest payment. I highly recommend that it is all in one payment. Anything can come up at the beginning of the year with taxes and insurance. And most times taxes are due in January or insurance is due at the beginning of the year. And you just don't know whether or not you are going to have those funds available. So I always recommend to try and keep all of that one payment in as one, again, with the principal, the interest, the taxes, and the insurance.
Okay, so just going on, get all this in conclusion. So I'm a person and I'm ready to go ahead and buy a house. I'm going to initially first fill out a loan application with you.
Yes.
And then I'm going to give some information to get me pre-qualified.
Correct.
You're going to vet that information by verifying all of the documents that I have submitted to you.
Yes.
During this process, or while you guys are looking into all that information, I'm already going to have about or approximately 5,000 saved before I even start this process, right?
Correct.
I wait for you guys to verify everything, and then I become pre-approved during the process of looking for the home, correct?
Yes. Now, I do want to be sure that it is understood in reference between that time frame, because once I obtain that information, I put all of that into your file, and then I then process it to my underwriters. Okay. My underwriters have a more fine-tooth comb of making sure that everything that I verified is correct. And I'll give you an example, such as taxes. Okay. So I obtain your tax returns, okay, for the last 2 years in W-2s. Well, the bank also requests your tax returns from the IRS. All right. So what we called a tax transcript. I know what you've given me, but now I have to match what you gave me to what the IRS has given. Okay. That process sometimes may take a week or so, which is why that time frame is important. Purchasing a home will not happen in 2 weeks. Most times it's going to be a minimum of 30 days because things take time. Things take time in reference to us ordering items and then for them to come back. And I'll give you another example, such as title work. We order title from the closing attorney. That in itself may take a week or so. Once we get that back, we have to verify that information. We have to make sure that that is correct. But then what if something comes back on title that's not right? So now we're having to try to figure out how to fix this problem in order that we will have a clear title search. Again, that time frame is important. And I just want to be sure that listeners out there understand that this is not going to be a quick fix thing, but trust the process and trust me. And when I, ask for certain documentation, or if I say, hey, this is going to take a couple of days or it may take a week or so, I promise you, we're doing everything that we can behind the scenes to make sure that your loan gets to the closing table.
Okay. So just one more thing. I just think it's something important that people want to know.
Sure.
If they know how long this process, and thank you for explaining that, if they see that this process is going to take a little longer than what they had hoped, and they decide to go an alternative route and go apply online with some other app. There's a lot of new apps that are coming out with people trying to get a house.
Yes.
And they say, hey, I've already been pre-approved. I have this from such and such. What would you say to them?
Well, remember, pre-approved means not approved. That means there's still some things that need to be verified. Okay. There have been instances where I've had a pre-approval with conditions, meaning that, hey, this person is pre-approved, but we have to now verify one or two more items here. For instance, if something pops up on a most recent bank statement, such as a large deposit, okay? Large deposits get flagged. We want to know where those funds came from. We want to source it, okay? So that might be an item that may come up and say, hey, yeah, this person is pre-approved, but hey, this condition came up. We need to verify where this $5,000 came from. Was it from a loan? Was it a gift? Did you get it from under your mattress? We don't know. All right. So things like that come up. And, for people that say that perhaps, well, I've already been pre-approved, it's different between being pre-approved and approved as well. Approved means, hey, we're ready to go. We're at the closing table and we have a clear to close on this loan. So I would be a little leery if someone says, hey, you're already pre-approved. You can just come on and go with us. I would dig a little deeper with that because more than likely there are some other items that still need to be resolved.
Before our time has ended today, I just want to give everyone out there that's watching an opportunity to be able to reach you if they needed to. How would they be able to do so?
Thank you so much for this opportunity. Again, I really enjoyed it. If you want to contact me and have any additional questions or just want to talk about your situation, again, my name is Tracey Brown. I'm with Synovus Bank. My direct number is 803-929-2072.
Thank you guys for watching and have an awesome day.
You've been watching After Coffee with Antonio Newton of the Newton Group at Coldwell Banker. After Coffee is a hyperlocal show interviewing hyperlocal businesses and people in the greater Columbia area. After Coffee, it's love hyperlocally.